Sales tax nightmare. A retail client just got hit with $23,000 sales tax penalty. Problem? One QuickBooks setting was wrong. They'd been collecting the wrong tax rate for 18 months, and now the state wants every penny, plus penalties and interest. I'm Bev from bookkeepingcoach.net. In 30 years of bookkeeping, I've seen sales tax mistakes cost businesses everything from a few $100s to over $100,000. And with Valentine's Day retail coming up, sales tax is more important than ever. Let me show you what went wrong. Let me tell you exactly what happened with this client, because this mistake is happening in businesses right now, and most owners have no idea. They run a gift shop. Flowers, cards, chocolates, candles, home decor items. They opened in July 2024, set up QuickBooks Online, connected their point of sale system. Everything seemed to be working fine. They were collecting sales tax on every transaction. The money was going into a sales tax liability account. They were filing their monthly sales tax returns and paying what they owed. They thought they were doing everything correctly. Then, in January of 2026, they get a letter from the State Department of Revenue. Our records show discrepancies in your sales tax reporting. We're conducting a review of your sales tax collections and remittances. The owner calls me confused. I don't understand. I've been filing every month. I've been paying what QuickBooks says I owe. What's the problem? I log into their QuickBooks and immediately see the issue. The sales tax rate in their QuickBooks is set to 6%, but the actual sales tax rate in their county is 7.5%. It's 6% state plus 1.5% local. Their QuickBooks was only collecting the state portion. They'd been under collecting sales tax on every single transaction for 18 months. Here's what this means. Every time they sold something, they should have collected 7.5% sales tax from the customer, but they only collected 6%. That extra 1.5% difference, they never collected it from customers, but they still owe it to the state. The state doesn't care that it was a QuickBooks setting that was wrong. The state doesn't care that the business didn't collect the full amount from customers. The business is responsible for paying the correct sales tax, regardless of what they collected. Over 18 months, this business did about $920,000 in taxable sales. At 1.5% under collection, that's $13,800 in sales tax they should have collected, but they didn't. But that's just the beginning. The state is also charging penalties. The penalty for underreporting sales tax in their state is 10% of the tax owed. That's another $1,380. Then there's interest. The state charges 1% per month on unpaid sales tax. For 18 months of underpayment, that's approximately $1,863 in interest. The total? $13,800 in uncollected tax, $1,380 in penalties, $1,863 in interest, $17,000. And they still have to keep operating their business and collecting sales tax correctly going forward. So they need to fix their QuickBooks settings, figure out how to pay this massive unexpected bill, and deal with the state audit process. But wait, there's more. Because the state found this problem, they're now auditing the entire 18-month period. They want to see every transaction. They want to verify that everything that should have been taxed was taxed. They want to make sure there aren't other errors. The audit itself will cost the business about $3,500 in accounting fees to respond to all of the state's requests and provide the documentation. And here's the worst part. This business operates on thin margins like most retail companies. They don't have $17,000 sitting around. They're going to have to set up a payment plan with the state, which means more interest accruing while they pay it off. The total damage is at least $23,000 when you include the audit fees and the additional interest on the payment plan, all because one QuickBooks setting was wrong. And here's what makes me so frustrated about this. It was completely preventable. When they set up their QuickBooks, they either entered the wrong tax rate or they selected the wrong tax jurisdiction, or QuickBooks suggested the wrong rate and they didn't verify it. One setting, one number, wrong for 18 months, $23,000 in consequences. This isn't an isolated case. I see sales tax errors constantly. Businesses using the wrong rate. Businesses not charging sales tax on items that should be taxed. Businesses charging sales tax on items that are exempt. Every single one of these errors creates liability. So let's talk about what has to be set up correctly in QuickBooks to avoid sales tax disasters. First, you need the correct sales tax rate for your specific location. This isn't just your state rate. Most states have local taxes too, county taxes, city taxes, special district taxes. Your total sales tax rate is a combination of all three of these. And here's the tricky part. Sales tax rates change. Counties vote to increase taxes, special districts expire, cities change their rates. If your QuickBooks rate is based on what it was when you set up 2 years ago, it may be wrong now. Second, you need to know which products and services are taxable and which are exempt. This varies dramatically by state. Some states tax clothing, others don't. Some states tax foods, others only tax prepared food. Some states tax services, others don't. In QuickBooks, every product and service needs to be marked correctly as taxable or non-taxable. If you mark something wrong, you're either overtaxing customers or undertaxing them. Both will create problems. Third, you need to handle multi-state sales correctly if you sell online. Different states have different nexus rules, which is when you're required to collect sales tax. Some states say you need nexus if you have inventory there. Others say nexus happens at a certain sales threshold. QuickBooks needs to be set up to collect the right tax based on where the customer is located. Fourth, you need to track sales tax separately from revenue. This seems obvious, but I see businesses that include sales tax in their revenue numbers all the time. That means they're overstating their income and potentially paying income tax on sales tax that they've collected. Fifth, you need to reconcile your sales tax liability account regularly. The amount you owe the state should match what's in your QuickBooks sales tax liability account. If these don't match, something is wrong. Sixth, you need to file and pay on time. Most states require monthly filing if you're over certain thresholds. Some allow quarterly. Missing a filing deadline triggers automatic penalties even if you don't owe any tax. And seventh, you need to keep good records. If the state audits you, they want to see detailed transaction records showing what was sold, what was taxed, what was exempt, and why. There are 15 other sales tax compliance requirements that vary by state. But these are the 7 that create the most problems in QuickBooks. And here's what business owners don't understand. Sales tax isn't your money. You're collecting it from the customers on behalf of the state. It's held in trust. If you collect it and don't pay it to the state, that's a much more serious issue than not paying income tax. The state can shut down your business for sales tax noncompliance. They can put liens on your assets. They can hold the owners personally liable. Sales tax debt doesn't go away in bankruptcy in many cases. This is serious compliance stuff, and most business owners are just guessing at whether their QuickBooks is set up correctly. So if you sell products or taxable services, what are your options? Option 1, assume your QuickBooks sales tax settings are correct and hope for the best. This is what most businesses do. Sometimes it works out fine. Sometimes you get a letter from the state saying you owe $23,000. Option 2, try to figure out yourself whether your settings are correct. Look up tax rates, check product taxability, verify your QuickBooks configuration. This works if you know what you're looking for and understand sales tax rules in your state. Option 3, have someone who understands sales tax compliance review your QuickBooks setup and make sure everything is configured correctly. The worst option is to know you might have issues and just keep operating the same way, hoping you don't get audited. Sales tax audits are common, especially for retail businesses. If you collect sales tax and you're not absolutely certain your QuickBooks is set up correctly, I can help you verify it before you have a problem. I do sales tax compliance reviews where I check your QuickBooks settings, Verify you're using the correct rates. Make sure your products are marked correctly as taxable or exempt, and confirm you're filing and paying correctly. The goal is to find and fix any issues before the state finds them. Because once the state sends you an audit notice, it's too late to just fix it. You owe what you owe, plus penalties and interest. I've put a link in the description below where you can book a call with me. We'll talk about your sales tax setup, what you're collecting, how you're filing, and whether everything is configured correctly. This is especially important if you're in retail with Valentine's Day sales coming up. Make sure every transaction is being taxed correctly. The link is in the description to book a call. Sales tax seems simple until you get it wrong. Then it becomes a $23,000 problem really fast. Don't assume your QuickBooks is set up correctly just because it's collecting some amount of sales tax. Verify the rate is right, verify your products are marked correctly, verify you're filing on time. One wrong setting can cost you tens of thousands of dollars. Subscribe to the channel for more QuickBooks and tax compliance tips. The link is in the description if you want your sales tax setup reviewed. I'll see you in the next video.